Okay, well, hello, folks. Let's get into a midweek update for the 7th of December and moving towards the last expiration cycle, which will be, I believe, next week. It is mid-December because there are 5 expiration cycles for the month of December, but that means we are 3 weeks left until the end of the year. This has created a little bit of turmoil. Let's jump right into it. I'm going to give you my 2 cents on why, so take responsibility for the outcome. You guys know the deal. It makes it really difficult to trade because we're at a kind of a inflection point where we are not really confident enough to buy into the markets, but selling the markets would kind of incur some tax implications, things of that nature. So what we do have is kind of a neutral sentiment. I'm just going to skip right down to it. But what I did see, Powell make some dovish comments last week, and I was surprised by that. Without seeing any sort of numbers, he did see a CPI in line, came out and said, hey, look, we could maybe take the foot off the accelerator as early as the end of this month. But then right afterwards, we get a job number that increased. That ADP employment number jumped up 63,000 jobs. I mean, it was huge. And then we did have services increase and factory orders increase. And so the consumer is still super active. And it was this push-pull that didn't go anywhere. And I just really have to tag along with the boys here. I just don't think these markets really do much. So let's look to see if we can't find ourselves a range. And let's play some of this neutral sentiment that we're seeing in the markets. Show the economic data once again here. It's showing expansion in these areas. Services, factory orders, jobless claims, non-farm payrolls. These are all front run. These are us. This isn't global economics. This is micro. This is what the consumer's been doing. We're active. Does that have a lot to do with Christmas? Sure. Corey made mention yesterday on his end of day that we could see some depletion of some savings, but the consumer's not slowing down. Maybe they will towards the end of the year after the holiday season, right? This is why we have this class. Let's jump into some of the stuff that we've been looking at over the last couple of weeks that has triggered that I kind of like. These trades are still good. They came from you because you're the best, and we've got some bulls and some neutral and some sideways. I will add to some of the bulls that I have here and even a couple of the sideways trades that sideways, or excuse me, some of the bearish trades that sideways should be or could be implemented in these setups. So let's just get started here. First one I've got is MKC. I like this to the bull side, plain and simple. It's above its 20-day moving average. It's consolidating. We've got ourselves a nice looking symmetrical triangle pattern here in the last, well, few days. We can cut this a little deeper on this end. Let's call it an ascending triangle pattern. How about that? It is moving up. It's been up the last couple of days. If you want to get a little bit more bullish on this, let's see if we can wait for it to get above that 86.5 if you want to get aggressive with it. However, for you diagonal spread people or you butterflies, targeted, condors is interesting. Condors would probably be a really good play, I personally believe, over the next couple of few weeks. I'm not a condor guy at all. But, boy, based on how these markets react and then counteract, if you have the gumption to stay in it, then they can be pretty useful. So let's take that into consideration here with this. So we've got 84, which seems like a pretty good level. You had a hammer here that actually touched 82. That'd be hard to sit through. But if you had an 84, 82, maybe an 86, 88 condor, and just try to play that game, that might work. But I would err to the upside because I do like it. It does show outperformance. It's a consumer defensive sector, which seems to do pretty good. The other one that's doing pretty good is consumer discretionary. In fact, I have it up as well. We'll take a look at it here in a second. So it just depends on what you want to go with it and your time frame. Time frame is going to be difficult, and I've worked with a few of you guys. Let's move to the next chart as I blabble. That have really second-guessed their trade over the last day or so. It's not just one or two, but I've had a slew of email. Oh my gosh, what do I do? We're breaking down. I should get rid of all my bulls and take profits on my bears. And then, lo and behold, we pause and we move back up. So it's pulling a lot of reaction. So instead of having to wait for that vertical spread to come in, it might be best to play something where that vertical spread can bleed off. Meaning I don't need it to get to a certain point. I just need it to stay above or below a certain point. So credit stuff. Do something with risk rewards of 1-to-1. The Condor is one that I just got done talking about. It's got, most of the time, depending on where you place it, has horrible risk reward. You're usually risking 2 or 3 to make 1, but the probabilities are high if you can sit through the range. This is Z-Lab. I kept this on the bull, and the reason why I like it is because it seems like it's trying to establish a nice little hammer today. Doji yesterday after that slip. Sure, the volume was higher. It's starting to get a little quieter, but if it can stay somewhere above its 50-day moving average and closer to this 20-day, I think it could be a really good just pullback. It did pull back deeper the last time that it did this. I think it might consolidate here and actually move higher. Don't have to jump into it today. You could play it sideways. You could wait for it to confirm tomorrow. Let me get rid of that chicken scratch here. Yeah, wait for it to get maybe back up above that 20-day moving average. What is that, 35-ish? High 34s. You could play it sideways to up there. Yeah, I'm going to say sideways pretty much across the board with up and down here. PFGC, I did like the Performance Food Group. This came from you guys. Boy, I think it came back 2 weeks ago. No, just last week. Looked pretty good. It's got this nice high base. Let me get my pin here. I do like this nice little high base up here. Breaks out, and now it's slowly coming back to retest it. This is textbook, and I like it because the bodies are staying pretty tight. Some shadows that aren't going too crazy, not too high, not too low. So consolidating back at maybe around that $60 level. So I do like that sideways to up. Let's get into the sideways. This is XLY. This came from us, this class yesterday. Go ahead and get a fresh pin out here. And it just seems to me that it's hit its head on the resistance at about the 146, and it's just pulling back. The moving averages are pinching. It does have a pretty good floor across here. I go all the way back to July. So it's got a pretty good floor right around that high 30s, 38, 137 and a half. So something range bound through here might be great. Now I'm going to go ahead and say it. SPY would be another one. Any of your, well, the diamonds is a little aggressive, but any sort of ETF or anything that tracks the indexes might be pretty cool here. You just have to establish a range, and if you want to wait, just wait for it to confirm. So you don't have to get into this today. We had a pretty good move to the downside yesterday. Let's see if we can hold here or even turn higher by the end of the day. It's just midweek, right? So if that happens, I don't want you guys to go shoot for the moon, shoot 150, 155. Just place something above this support level here at around the 138 level. You can make money sideways. You just have to be able to sit and watch it. Let's get into CPNG. Also sideways for this class. We slipped a little lower since we talked about it, but it does still have technically that range. It's sitting right on its 50-day moving average. I do like that. It's a lot of volume that we had yesterday, and I think that was just a big round of market selling. We need to get follow through, and I think that's where the neutral outlook is coming from Maverick. Is we just don't know if we're going to get the follow through of bearishness this late in the year. We're seeing Powell being more dovish, but we're seeing things that say inflation is a little higher, but to make a huge move here in the last 3 weeks doesn't make any sense. So if we add that to technicals, let's see if we can't stay here, maybe start to climb higher. Then you've got a pretty decent range between 18 and 20 up here. All right, move on to some of the bears. And these bears, guys, I'm just going to say that I'm comfortable carrying these. Well, I'm not going to say that because I won't take anything longer term, but if this is something that you'd carry into January, February, March of next year, a lot of these I don't think are going to make it. This is GameStop. This has already had its problems. We've talked a lot about the meme stocks. Corey talked about it even yesterday, and I completely agree. They're not doing anything for anybody anymore, and so they're left with what the company is and what they can do on a day-to-day basis. Bed Bath & Beyond is one. GameStop is another. I've got Shopify coming up here in a minute. Spotify, excuse me. But Shopify is another one. All these stay-at-home stocks, all these meme stocks are kind of fizzling out here. It doesn't mean that they're going to collapse, but it doesn't mean that they're going to do what they've done in the past. We're probably done with all those crazy days where a Reddit will come out and say something, this thing jumps up 250%, right? So taking that in, keeping that in the back of your mind, it's bleeding off, and it would have been nice to catch this yesterday because I just like the way that it's moving past here. Yeah, 22 is a support because of that, but if it's indeed over, this thing could move a little further to the downside. I'm not going to be too aggressive directional at all for the rest of the year. I'm just going to say that right now. Boy, maybe I showed you my hand when it comes to my outlook, but hey, let's move to Amazon. And the reason being is I just don't see anything gaining strength. I don't see a bull move that's going to sustain itself for the next 3 weeks up. And I don't see a bear move that's going to collapse these markets downwards unless there's something super bad tied to it where institutions and investors have to get out. But knock on my glass desk here. That hopefully that doesn't happen. This is Amazon. I do like this descending triangle. We've been talking about Amazon for weeks and weeks and weeks. It's falling. It's continuing to fall. Doesn't mean I'm going to target this at 80, but below 90 might be kind of a fun play, right? All right. I did say that I would talk about Spotify, right? Not Shopify, Spotify. Both of them are looking pretty weak, but I did like this. And sideways also, if you guys truly believe, hey, this is probably as low as they're going to get and there's some strength, because you do have an ascending triangle pattern here. It is above its 50-day moving average, but you could find a range. I think 80 is a pretty good resistance here to the upside, and you do have support at 70, taking into consideration this pivot here and the low of this. It's not quite a hammer candle. So something sideways to slightly lower on Spotify. Right on, folks. Let's get into our market analysis. Now, it was really interesting because when Powell came out and was dovish, and it did, once again, I'll say it again, it did catch me a little bit by surprise. I think it's early yet, especially with some of the mixed signals we're getting in the economic data. The markets really, really, really enjoyed it. So that would be a good time to put money to work for the end of the year. Let's throw some money out there. I don't have to worry about what I sold because I just reinvested it before the end of 2022. That happens. Then we get a couple of bad pieces of data and we're right back to where we started. So far this week, now this is just Monday to today, down quite a bit. And it's because, hey, the last 3 days we've been selling off from a pretty good push the end of last week. Diamonds are down 2.5%. S&P about 3.5%. The Qs just over 2.5%. The Russell is over 4%, and I think that's going to be the most tumultuous. The small cap has been kind of pushing and pulling, and oil. I thought that was interesting. You guys will see here that energy is by far the weakest sector so far, and it could be just taking some money out of it because it's done so well for the majority of this year and putting it elsewhere. So we could see a little bit of rotation going on towards the end of the year, but I don't see too much. And if oil's in energy is going to fall, you'll see it in a minute here, as much as it has, that money's got to be put back to work unless people want to be taxed about it. It's pretty cool, right? So gold not going anywhere. I think the dollar's still kind of the leader. I do think interest rates are going to kind of gauge how these markets perform over at least the shorter term. But we'll see where we go from there. So here's the SPY. And it's not really giving us much than, hey, a little while ago, I just loved this breakout. Okay, 410 was definitely the marker to get above so we could actually climb higher and show that we are maybe out of this longer-term bearish move. I don't have the longer-term chart. You've seen it a few times with the last couple of updates, but we are textbook touched this thing and have moved off of it. It's absolutely what was expected. Everybody talked about it, and so far, it's happened. Now, I don't believe if we had 3 or 4 or 5 months left for the end of the year, yeah, I could say that maybe we hit 380, go back to 390, hit 370, and continue lower. But since we're at that cusp of the carryover at the end of the year, I don't think we do anything but consolidate. So let me see what I can do when it comes to, or what we can talk about when it comes to a range. Well, we know this is going to be the high part of the range. I think this can be revisited with a little bit of a surge, or I like to call a bullish squeeze. So it'd be an intraday maybe spike up to this area and then come back down. This is definitely your line in the sand here for resistance. We do have a support level just below the 20-day moving average, but the major one will be right around the 50. And we can come back all the way back to this July range. Let me go ahead and draw this. So we're above that July range. My money, or not my money, but my guess, and if I'm going to make some trades, is between that 390, 410 level saying that we hold this the rest of the week for the end of the year. Neutral just seems to make more sense here. It makes more sense. Okay, so I did all that on the SPY. I don't have to do it on the others, but let's take a look at them. Here's the diamonds. I wish they would do a little bit more than 30 stocks in this, but it still technically has the ability to come back and test this 332.5. Should we call it that? Sure. And then back up to 340, taking this into consideration in here, 340 to 341. So it also has the ability to stay within a range through the end of the year. And then last but not least, and definitely the most struggling, let's see if we can get a range out of the Qs. It's probably going to be a double top here, just about 292. And going all the way back to July, 280. Yeah, so these do have the ability to make a range. Now, they are trying to establish this support level today. Today's not over. We'll see where we end, and let's see what happens when we go into Thursday. Now, we do have the PPI, and I'm not sure. I'll check it here in a second. We're about to get the economic data to see if is it Thursday or is it Friday? I believe it's Thursday. With that being said, why don't we just jump into it? Okay. So, so far, this is the number that slipped for me. And it was, we have the services final, which is in line with expectations, but the index, that's a gap, that's up. A 554.4, expecting it to decrease, and we exceeded the previous. That's a tip. That's an uptick in services. That's activity. Factory orders also 0.7. They're expecting an uptick anyways. Could be demand for the Christmas season. I'm not sure, but it was higher than expected. These are the things I think that has carried into the markets to where they squiggled a little bit and just kind of erased what we did last week. That's my opinion. Now, we don't have too much. Well, let me get to the next one here. We don't have too much for the rest of this week, but we do have the CPI next week, and we'll have to keep an eye on that one. But here is the PPI. Yeah, it's Friday. So we'll see if that's going to have an impact. I don't think you're going to get the reaction as much as you will with the CPI. But I am going to keep an eye on this initial jobs claims number here to see if it is indeed at 230. Or it should increase. That's something that we should see is an increase. But that ADP employment number last week is what caused these markets to gap down. 63,000 jobs above expectations. Still adding jobs, still keeping jobs, still still moving along. So we'll see if that going to bump tomorrow. So that might be the first little catalyst, and then we'll see what the PPI does. But I think the CPI might be the next big number that creates a little bit of a reaction. However, this can happen within that range. Keep that in mind. Let me go ahead and pull the class. Since I built a poll, let me see if I can find it. All right, there it is. I'll go ahead and launch this for you guys. Because I kind of want to see where you're coming from or what you're thinking. It's tough because I truly think these markets are going to squeeze bulls and squeeze bears, and you're going to get gaps down. You're going to get huge moves lower. Yesterday was a great example, and me included, folks. If you think that you're immune to this reactionary part, you're not. I read a slew of emails panicking about some of the bull trades and sideways stuff people are in because we were down substantially. I don't know if we're going to get the run like that, but if we can establish a support level here, we need to seriously move ourselves something a little bit more neutral. Okay, we've got 91% voted pretty quickly. We'll do that. We'll just start. That'll be good enough. So I'm going to go ahead and close the poll, and I'm going to share it. And you guys are 0 to -1. And by just a small margin, well, 10% depending on what you guys do. 10% -2. So yeah, I'd say we're basically 0 to -1, so let's call that a -0.5. All right. Thanks, guys. Appreciate that. Let's hide that. And I am going to be 0 to a small +1. You want to know why? Plain and simple. We are at a support level after a higher high in a pullback. Now, we are below that 20-day moving average. So I've got one little red, which is why I'm not a +2 for the month. But if we bang this support, I think we just go right back up. Now, I don't think we go right back up to here, right? This isn't a +3. This is a +1, expecting a move back up or close to the higher point to establish a range, and then we continue sideways. And that range could actually even be a little lower, folks. I know you have to zoom in a bit, but this is the higher part of the range. Right here is range number 2. So number 1 would keep my +1. Number 2 would be that sideways bearish movement that we'd expect maybe to carry through for the end of the year. All right, cool. Thanks, guys. Appreciate that. Thanks for the participation. Let's jump into a quick sector analysis, and then we're going to go out and take a look at the trades you're looking at. So overall, in the weekly performance, healthcare is leading the way with a monstrous 0.67% loss, or small loss, being super aggressively bullish, right? That's kind of a bad joke. Energy, 6.6% down so far. Now, this is from Wednesday to Wednesday, and I'm going to come all the way back. We've got performance chasing. We have moving out of some of the stronger stuff and in some of the weaker stuff to avoid tax implications, and saying, okay, I can poise myself to weather some sort of a pullback, take some profits while you can, put it in some stuff that's neutral or safe, basic materials, utilities, consumer defensive, healthcare. These are the ones that are, sure, they're down, but understand, if you're kicking butt in energy and you want to get out of some technology, go ahead and put it in some of those safer plays through the year's end. That way you can make your play next year and avoid that massive tax implication. So yes, I think it's just kind of positioning, or poising, I should say, for the end of the year and the beginning of next. That's my opinion. Let's take a look at the charts. This is healthcare, and this actually looks pretty decent. I do like it. I think it's pretty good. A couple of them were on our bear or bull watch, but it could pull back to this level. It kind of already has kind of an inside day here. We gapped down, but it's moved higher. Volume, it's decent. It's on its way down. So lowest part of the range, 134. You could play 136 to be reserved with 140. Look at this, 136, 138, 140. This just gave you a butterfly trade for you guys that are super sideways and think that, hey, we might consolidate here and pinch off over the next 2-3 weeks. I'm not sure where its expiration cycles are. Most ETFs do have weeklies. So go ahead and check it out and see if that's something you can play. Let's move to the weakest, and this is the consumer, or excuse me, energy. Wow, I'm always used to saying consumer discretionary or defensive, but it is energy, and you can see it has broken that support level. I truly think that this is just taking profits and then reinvesting them somewhere else to avoid tax. Energy's been great. Energy's been strong. It's been a leader. It's been doing really well. We've got a lot of traders that have done pretty good with it. It's just slipping as of late. Now chart-wise, it is definitely closer to a bearish trade than it is bullish. It has broken that first support line that I drew here. It's approaching support that it set as resistance back in the end of August, but it is below the 50 right there and the 20. It's early yet, but I would be glass half empty through the end of the year. And that's kind of all I'm going to do here, folks. I'm not really looking into, hey, let's talk about January and February. I'm just trying to talk about year's end. So we're moving closer to the end of the year. Sideways to neutral trades look to lead the way. I've seen success in both. I've seen a lot of bullish stuff turn sideways, a lot of bearish stuff turn sideways. A lot of targeted traders, targeted butterflies. Credit spreads have done all right. Diagonal spreads, it's a tough game. It's a tough game to play with diagonal spreads, but you got to hold true to the diagonal side of it. Maybe don't diagonalize it as aggressively up or down. Maybe turn it more towards the calendar spread. That's great. But you just got to trust that these markets, if they go too high, will come back, or if they break, or if they start to go lower, they'll come back. So expect reactionary moves throughout the rest of this year. I think the CPI causes one. I'm not sure about the PPI, but employment might be one that sneaks up on us tomorrow. So stay focused on the overall range of the markets, and don't let one day create destructive impulses. And I'm just absolutely going back to some of the emails that I had to respond to yesterday. Sentiment is definitely neutral. Economic data is mixed. That's the best I can make of it. Powell sees something that maybe we don't. Maybe he's ahead of us, but I'm seeing some numbers that are a little bit more hotter than I would like, personally, for me to not think that there's more to the downside in these markets. That is enough. Let's get into some of the trades you guys are looking at and share with the rest of the class. Let's see what the markets have been up to. All right, look at that. Dow comes back and it's flat. NASDAQ slightly lower in the S&P. So it looks like they're trying to establish a support level here after yesterday's move lower. That could easily change by the time I'm done talking, and by the time we get to the end of the day. We could fall apart, or we could stay flat, or we could turn around and run. So it's too early to really make too big of a reaction longer term in either direction. Just stick to what you have and trust in your plan. All right, John, let's start with you. We've got ADM. Look at that. We've got a bull call spread here, I believe. There's a lot of numbers in there. Let's make sure I get them right. 90, 97 and a half. Is that what I'm seeing? Yes. 90, 95, 96, 97 and a half. Well, right there, right at the high. Okay. All right. Neat. Okay. Sorry, let me stretch this out a little further. Okay. And that is on 2023. So he's going into January. Okay. John's going to play this. 12. Okay. Bull call spread. Okay. So instead of going further out, he's going to go to the 16th. Let me see. I think that's better. That's a week and a half. Thinking that, hey, we're going to move off of this. And Archer Daniels is going to participate in a little bit of a push to the upside. I'm fine with that. First, it looked like you were going for, January 20th. But I would tend to lean more towards the 16th. Makes sense. Doing something shorter term. You might stall out even at this 95 level, even with a pretty good move to the upside. So if you want to lower that and go to the 16th, that's cool. That makes sense. Let me put it down. Or carry it all the way to expiration, and instead of hitting that your upper 95, you could just, that's where it kind of settles out. Oh, I'm sorry. Did I draw it at 95? I think I drew it too far. I sure did. Okay, this makes more sense. I drew it up 97 and a half, right? Yeah, I like the 90. I like the shorter term with the shorter target. Excellent. Cool. Thanks, John. Yep, I like it. I'm going to put ADM down on the bull side. So the idea, folks, once again, sorry for the confusion. If he was thinking 97 and a half if he went through to January, or 95 through the next week and a half. And I would say error probably to the short side because I don't know where these markets are going to end up. Awesome. Thanks, John. How do I feel about TOST? Let me see. Let me see, Robbie. I'll tell you how I feel. It's awesome. I'll tell you all my opinions and feelings. I've got the microphone. All right, that's a joke. 17.5, 20 December. Vertical spread. Okay. Let's see. 17.5, 20. 20 going back up to this area. Oh, probably one around here. 17.5. I like the support here. I'll tell you that. I hate the fact it's underneath its moving averages. But 17.5. A little aggressive to the upside. Let's see. Spread sideways range. Feel about TOS 17 to December 16th. Perfect. You know what? You know what, Robbie? I'm cool if you were to play something sideways to bearish. I don't know if you said puts or calls. Did I read that? Nope, just said vertical spread. Okay, cool. Well, let's take a look at this. It's got resistance here. That's its last at 19, which is at the 50-day, which it did cross over right there. Broke through the 18 support and is playing with this. Boy, if this thing rolls over, I'm okay playing something sideways to down. Choose your strike prices. I'm fine with that. You could do 17.18, 17.19, 18.20, 18.19. Depends how out of the money you want to be and the risk reward. There's, the closer you get to the strike prices or the current price, the better the risk reward will be. But I'm okay with something sideways. Can I put that down? TOST, and I'm going to put a little bit of a down arrow. And the whole reason why I'm thinking down if you guys want to allow me to do this, is this. It's this little lip over, crossover, bearish, support, failed off of that. Here's a pivot, right? So sideways to down from here, absolutely. Absolutely. Cool, thanks, Robbie. All right, Dan, what do you got? Oh, Dan always has fun stuff, don't you? Steel. Sideways to up. All right, let's take a look at it. Let me zoom in on her. Okay. Let's see if you've got a target up here. 27, 28, 29 call butterfly for the 16th. Draw some lines. 28, 27, 26. Is that what you said? Yeah. 27, 28, 29. Aha. Sorry. I do need to zoom out. It's always best to have a reference, I think. Makes it cleaner for you guys to see when I start scribbling lines all over the place. Okay. Okay, so 27, right about where it's at, 28, and then 29 right there. So slightly targeted. He's only looking for about a week and a half for it to just bleed higher. I'm totally fine with that. Totally fine with that. If the markets consolidate and push around and there is some fear out there, maybe they stick to the precious metals, or excuse me, basic materials, and still kind of just continues this little sideways jaunt to the upside. All right, I'm good with that one. Sure, Dan. It's worth a dart. He says it was about 13 cents for that butterfly, so pretty good risk reward, I imagine, on that thing. All right. Sebastian is playing gold. Now, you guys have heard me say this a million times. Commodities are not my strength, but let's just play it as a chart. Pull back. He wants a 69, 67, 65 call butterfly for the 16th of December. So 69, 67, 65. 167, right? 169. I imagine that's what you're saying. Okay. Let's see. 67's about, well, always has been right around there. And where's that last one? 65. Right, just about where it's at. Right here. Okay. I'm okay with that. Those aren't exactly straight, folks, those lines, but I get the gist of it. It's interesting because the gist of it, it actually hit that 68, which is actually pretty good resistance, and it's come back down. But what's interesting is notice it's closed its gap, right? There's a gap, and it closed it 2 days ago. Now it looks like it wants to kind of fill it. You do have a little bit of resistance that comes back into play at 167. But, yeah, I could see this kind of just meander sideways. It's not bad. I'm going to put gold down as sideways. And considering when I was running those numbers for the week so far, everything was like negative. You know, what was down 8%? Energy, or oil was down 8%. Russells are down over 4%, and gold is just not even down 1%. I just don't get it. The thing is just parked, right? Okay, let's move on. Joe's got FUTU. 55, 60, 65, butterfly. Oh, what? Are we playing this down, Joe? Let's see, 50, 60, 65. He's expecting a pullback down to the 60 mark. Okay. See if it retraces to the, previous high and the 20 SMA look at the December 23rd option. So he's going to go a little bit longer. Now, I'll just flat out say it. This is a counter trend trade completely, but doesn't mean that it can't happen. So it just depends on your outlook on the stock and the overall markets. It feels like, you got dark cloud cover here, right? Let me get rid of this here. This is a nice gap up. This is called dark cloud cover. Those two candlesticks. So maybe it's popped up and it's going to pull back. Now this hasn't done it before recently. It usually consolidates, but that's 55 to 50, and he's saying 670 to 60 is your midpoint. Right? Yeah, so 60. So yeah, that's not too far back. I don't know. It's like I say, counter trend, but let's take a look at it. Let me put it down as a. I'm going to put down FUTU as a sideways in the bear category, and the reason being is because that'll remind me, hey, it's kind of a counter trend or a retracement trade if the markets get weak. One thing that allures a lot of my traders to counter trend is the risk reward. It's outrageous. They're usually really, really high. So there's that part of it. Really depends on your outlook. Okay, Robbie. NVAX. Okay, I'm going to have to play this game here. There we go. December 16th, so a week and a half. Regular expiration. Oops. Let's get to 1718 and a half bull call spread. Okay, playing this 17 and a half, 18. It's even tighter. It's somewhere in here. So he's just playing a little bit of a blip up over the next shorter timeline. Okay. Let me pull this out, stretch this out, make it look. There we go. Okay, so you're playing a little bit of a retracement. I'm going to go ahead and say it. It's another counter trend. This time it's to the upside. Just going to play something back up to the 18 and a half. Was that what that was? 18 and a half over the next week and a half. Let's see. Is there something we can do that would take some sideways into this? Instead of a straight up bull call, why don't you do something like a 16-18 bull put? That might be something. That way, because that way you're down in this area here, and that 16 put that's in the money can bleed as this thing slowly does that. So if it doesn't go anywhere, you'll keep more credit there. 18 is going to be out of the money, and that way you'll make money if it doesn't get to 18 and a half. Or if it rolls over and falls apart, you'll probably lose a little bit less. I'd look at something a little wider, more of a credit. More of a, if you still want to play the bull side, that's fine. Just do a bull put. Sell the 16, or excuse me, sell the 18 and buy the 16. My 2 cents. Because once again, it's kind of countered. Let me put it on the sideways NVAX with an up arrow. Okay. I like some of these trades. Just thinking outside the box. All right. Let's move on. Yeah, there you go. All right. Yeah, sure. Has been in. The comment was really awesome. The comment's like, hey, guess what? I closed a couple of contracts because I saw they're mildly, what we got here? Mildly bull trades, healthcare and material sector, but I closed my contracts today for a small gain because of the market recession fears and the PPI numbers coming up. We know there's going to be reaction to it, but we don't know if there's going to be follow through. Thanks for sharing, because that's the majority of the emails and some of the things I've been working with you guys over the last few days. When you see this huge surge come into the markets and right back out because of some contradicting numbers, it gets a little scary. So let's take a look at a few of these. 155, 160, diagonal call spread, 155, 160, and it's still good. It's still perfect. It's still exactly what you wanted to do. In fact, it's a little hot. In this situation, it would be good for your position for this to pull back to the 160. Reduce what you sold on the reduce the cost of the 160 where it's at 164. 155 will come down as well, but not as fast as that 160. So that little early to pull it, and I understand why. Reaction. Let's take a look at the other one though, Mesman, while we're here. Still really great trades. And then this one is that one was a good trade. 145, 150. It's your same situation. These are perfect. They're still fine. So I understand being shaken out of the tree, but you got to have confidence in your chart because those are both really good trades, and they still are good trades. I imagine the 150, the ones that you sold, this one and the last one, are going to expire on Friday or the 5th. Yeah. Okay. Or excuse me, the end of this week. No, you didn't need to do anything. Yep. You didn't do anything. And it's kind of cool, folks, and thanks for sharing, because that's kind of what this whole deal has been over the last few days. Net. Well, let's do this one more time. Let's finish it off this way, folks. I know we're getting a little philosophical in today's class, but that's completely fine. Our outlooks, your trades, whatever you did at this point, is back to this point. This is the kind of garbage, and Corey said it yesterday. I expect a lot of this trash, and he drew lines like this. I think some trash or garbage. I don't know what it was. I laughed, but we just jump around and just consolidate and do this through the end of the year. Well, that's what this is designed to do. It's to scare you to death here and scare you to death here. It shakes you out of the tree. It's called a bull squeeze and a bear squeeze. And that's exactly what I'm talking about. If you have faith in the chart that you're trading and your trading plan, just weather it. Just weather it. Don't let one day change your mind for the rest of the week or the rest of the month. Just stick to your guns. So excellent teaching point. Thanks for sharing. Okay, guys, let's see. Let me finish this up. I've got one last question. Why I start typing some trades. Let's go home. You guys can watch this. Why I start typing. And that question is from Sebastian. In your opinion, what has been the biggest challenge for Maverick traders this year? Wow, that's a great question. And it's too early for me to answer. What I usually do, well, personally, what I usually do is just take an assessment of all the coaching that I've done and all the things. I talk to the rest of the staff, everybody around, and say, hey, what do you think you've been hearing the most? What works the best? What doesn't? But I'm going to go ahead and say, doubting their trading plan, and trying to trade more towards feeling and what they do and don't believe versus what the technicals are doing. Okay, this is, well, look at these markets, right? Starting to pop up a little bit. This is the list I have. All right, guys, well, that's all I got for you. Thanks for the questions. Thanks for the participation, and we'll talk to you next time. Bye, guys.